Mr. Chairman, I just have a simple question. My understanding is that if you average out the farm workforce tax credit, it comes to about 12% on every additional dollar that they will be spending on their farm labor. Is that correct?
No. I'm sorry. We don't believe that's the case. No.
What is the number?
They believe that when we're finished, it will be 100%. In other words, they would be getting more than because they're making more than the minimum wage, we're not going to have as much problems.
Well, now I guess I'm really confused. If the numbers here that we understand are for 2017, it'll be $250 per farm employee. So if they are required to get an incremental amount over what they're currently making, how does that work out to I mean, they're going to be making a lot more than $250
No, what we're thinking, I said before, is not everybody is making $9. And we think as you go into it, you'll hit people maybe who are at 11, and when we get to that point, we'll hit them and they go up. So at 9%, at $9 going up to $9.70, we may not run into that much because we think the farmers are not cheapskates and they do pay the workers.
Again, I just want to make sure we're clear. We're on the record here, and there are going to be a lot of people reviewing this discussion. If we go from $9 up to a higher level, and you only get a $250 per year credit for that employee, by our calculations, and correct me where I'm wrong here, that's only about a 17%. And it, over the years, goes down to about 10%. So average it out, about a 12 to 14% recoupment of the additional cost that we are requiring farmers to pay.
Mm-hmm. Again, I repeat it in a different way, but it's the same thing. The numbers you're using is that everybody, every time, is moving up. All the workers. And we claim that no, it's not all the workers because they are paid more. You're implying that no farmer would pay somebody $13 or $14. But they do. And so your numbers, and when you come down to the beginning, we're at 9 now. We'll be going up to 970. Not everybody's going to get there because other people are already paying more than that.
Okay.
So when we may take that into, we then think it's an equal.
All right, Mr. Chairman, can I ask, let's suppose there is $1 of additional cost for sake of discussion.
Say that again, $1 of the...
Let's suppose there is a $1 of additional cost per hour.
Yes.
And under the formula, as we understand it, it winds up being a 17% tax credit. Who pays the other 83 cents?
Again, it's a different way that you'd make your checking. And we do it against the we still come up with the fact that the farmer is not, as I say, not paying people. So the balance comes from the fact that we're doing things and they're not having to move because they're paying above the number.
Well, if they're paying another $1 to that employee, the cash has to come from someplace.
But, no.
You're offering
No, but
17 cents back on that dollar. Where is the rest of the money coming from?
He bought a Cadillac with it.
No, they don't buy Cadillacs with it.
No, well,
Maybe some of your
answer, I
constituents
made
buy
that
Cadillac,
answer.
but my constituents don't.
Okay.
They need to come up with that 83 cents from someplace. I'm asking you simply, where does that money come from?
Every worker gets the credit. And again, the reason I mentioned the Cadillac, because it's so far off, the way you put your numbers together are also that far apart. So I figured I'd match it with that. That was the only reason.
Mr. Speaker, I wish my clients or my constituents could buy Cadillacs, but they don't. In fact, are you familiar with the concept of a hundredweight of milk?
A what?
A hundredweight of milk.
Yeah, I know a little about it. A friend of yours from your side took me to a farm one day.
And
I
do you
still
know
haven't
what the
gotten out of
current
my
price
clothes.
is for a hundredweight of milk that's being gained by an average farmer in upstate New York?
Yes.
What would that be?
No, I'm sorry. Ask me the question again.
All right, let me tell you, it's about $14. Do you know what the
No.
production
Ask me.
cost
I
is?
didn't hear the question. I'm sorry.
Do you know what the cost is of producing a hundredweight of milk?
No, I don't.
And do you know what they are currently receiving for their hundredweight of milk?
No, I heard somebody say 16 earlier.
Are
but
you
I'm-
familiar with how much money the average farmer in upstate New York is losing this year in the milk business?
No, I'm not.
Thank you, Spicer.
But I do know we helped them when we made sure that their property tax was 20% less, and we did that 2 years ago because we too understand how it's important to have good farmers and farmers that are happy. But
one last question, Mr. Chairman. If we are giving an average of 17%, going down to about
that's
6%,
your number, yes.
that's an accurate number,
Yeah.
down to about 6%, why are we giving a 30% credit to Hollywood millionaire producers making films in New York City?
Good
Could
question.
you tell me, where do these numbers come from? Why are we giving 10 to 12% to our family farmers when we're giving 30% to Hollywood millionaires?
Again, it goes back to other questions. Our movies, we always have to deal with the question of whether we get the work that they bring or do they go elsewhere. So you know that also. So we do it for that reason. And
I do know, Mr. Chairman, that Hollywood millionaires give a lot of campaign contributions compared to farmers.
Well,
I wonder whether or not that went into computing these calculations.
You're going to wake up my side. Don't do that. Okay.
Thank you, Mr. Chairman. Thank you, Mr. Chairman. Mr. Speaker, on the bill.
On the bill, Mr. Nojay.
A wise man once said that you are entitled to your own opinions, but not to your own facts. The facts are these. New York State's largest industry is agriculture, and yet, over the past decades, we have lost hundreds upon hundreds of family farms, largely because of things that government has done to them. They currently operate under more regulations, more rules, more restrictions than farmers in any other state in the country, including farmers operating in California. And for that reason, they are losing money on every hundredweight, which is 100 pounds of milk. It is the standard by which milk is sold, and they cannot increase their prices. I get tired of hearing the comment about how Henry Ford increased the wages to his labor. Well, you know what? Henry Ford could increase the cost of a car. Our farmers cannot increase what they get for their milk. It is determined by a government-determined formula. So once again, we're looking at an entire industry and saying you need to spend more money on your labor, which is 63% of their cost, but you cannot recoup that. So what do? The governor, to save face, comes up with something dandly called the Workforce Retention Tax Credit. We're not going to retain any jobs. We are going to lose hundreds of thousands of jobs on New York's farms because we are costing them $1 and giving them an average of 12 cents back. That is a tax. A tax is when government requires you to spend something for which you get nothing back. And government is costing 88 cents on the dollar to our farmers for every dollar of increased wages paid. So, Mr. Speaker, with all due respect, and we can talk about this more later today when we talk about the minimum wage bill, but let's not confuse ourselves. If we're going to have truth in advertising about what we're passing tonight, this is not a job retention act. This is part of a scheme that will destroy New York's family farms and cost tens of thousands of jobs. Thank you, Mr. Speaker.